Welcome, I'm Dan Danford with Money Made Easy. We do a series of podcasts for DadsDivorce.com, and this time we're going to look at one of the topics that comes up a lot, and that's taxes. It's the time of the year when people are collecting their information and they typically have a lot of questions. One of the things I get asked at a lot of parties is, how do you save money on taxes? Actually, you just need to understand kind of how the tax system works and how the forms work, and that'll give you some guidance there. The first thing that you do is you reduce the amount of money that you make, or reduce your taxable income. Now, nobody wants to make less money, so there's some tricks to doing that. One of the first things is that your adjusted gross income comes from the front page of your form. And basically what that is your W-2 income plus or minus some adjustments. The kind of adjustments here is if you have a business, your business income, if you're self-employed, will flow through to the front, and if there's a loss from your business, that will reduce your taxable income. So that's one place. The other place is the front of your form is where you deduct like IRA contributions if you're allowed to make them. Now, most people, because they participate in retirement plans at work and places like that, they may be limited on their amount of deductible IRA contributions. But you need to check with your tax person and see. Basically, those kinds of adjustments on the front of the form, they actually reduce your adjusted gross income, and that's a good thing to do. Now, once you flip to the second page of the form, then you start looking at things like your itemized deductions. Now, basically, itemized deductions are just where Uncle Sam basically allows you to lower your taxable income because you make certain kinds of expenses. Okay, the most common ones on the Schedule A, the ones that people think of most, are mortgage interest and charitable contributions. Those are both large numbers for most of us, and those will create large deductions which will reduce the amount of tax that you have. Now, some of the others that we look at is things like certain kinds of expenses. If you have very high medical expenses, then that will become a deductible item as well. Now, most people don't have medical expenses to the level that would allow them to be deductible. But if you've spent a lot of money in the past year on medical expenses, that might be a place to save some money. There are also things like tax preparation, expenses related to your income. If you have investment expenses, some of those are deductible, but again, there's a floor on the itemized deductions where many people don't spend enough on those items to make it worthwhile as an itemized deduction. But again, you just need to sit down with it and put a pencil to it and see whether that helps your situation. Okay, so now you've, from the front of your form, you've lowered your adjusted gross income, you've filled out your Schedule A, and you have most of the big deductions there. The third thing is basically you calculate your tax, and then you're allowed to take credits against the tax. Now, the more common credits would include the earned income credit, and then there are also some credits for tuition expenses for schools. And again, the rules are pretty complicated. We aren't going to go into them here, but it's good to know that with a tax credit, it actually reduces the amount of taxes you pay. So if you did your calculations and you owe Uncle Sam $1,000, but you have a tax credit of $100, then that's dollar for dollar. You'll only pay Uncle Sam $900. You know, truthfully, when you look back at a year, there's probably not a lot you can do now about the taxes you owe for last year. The real value of understanding your taxes is so that you can make good decisions in this year. And if you make good decisions this year, then you'll be able to reduce your tax liability when you pay it next April. And that brings up a key point, because one of the things that most people get really upset about is the whole concept of whether you pay tax at the end of the year or whether you get a refund. And truthfully, that's just a function of how much money you have withheld in your paycheck. When you get to the end of the year and you calculate your taxes, you owe Uncle Sam, say, $1,000 for the last year. Well, if through your paychecks you've deposited $900, then you're going to have to write a check for the other $100. If, on the other hand, through your paychecks you've deposited $1,200 and you only owe $1,000 in taxes, then you're going to get a refund. Now, the tax tables tell your employer how much to withhold based on you and your family, but you can always make an adjustment in that. You can go to your payroll department and say, I want to increase the amount that I have withheld. I think most professionals would say the best way to end the year is for you to owe Uncle Sam nothing and Uncle Sam to owe you nothing. In other words, at the end of the year, you break even. However, I've found from a psychological standpoint, most people prefer to get a refund. So if you'd like to get a refund, but the last couple of years you've been paying, then probably go visit your payroll department and make some adjustments on the amount of withholding that's taken out of your paycheck each period. So basically, I go back to what I tell people at the cocktail party when they ask me. They say, you know, how do I pay less taxes? So the answer is really easy: make less money. But the truth of the matter is that can be adjusted depending on our circumstances. And once you have a general understanding of the forms, it'll help you make good choices as you go forward from here. Hey, that's it for this episode of Money Made Easy. We'll see you again next week. Thank you.